1 setup a day, poor Kimi away. 2 setup a day, reach not far away. Hello everyone, welcome to my channel Supply and Demand Mastery. This video we are going to learn about the liquidity. If you are unable to identify the liquidity, you will become the liquidity. We know majority of the trader trade based on the retail pattern like trend line, patterns, indicator, and support and resistance. This is the biggest reason to manipulate the retail trader, because smart money trader such like the bank and the institution that trade against the trader. So what is the liquidity? Liquidity is an area where sitting masses of order such like stop loss, take profit, buy limit, sell limit, buy stop, and sell stop order. So the higher the order, the stronger the zone. So when we know there is a high liquidity zone, this is where the big trader they are willing to trade. So everyone as a smart trader, we must know where is the liquidity. And basically the market movement, we have 3 types of the common patterns. So type 1 is the swing movement. So the swing movement is whenever there is a pullback, either a bullish or bearish movement, there is laying around that area. So this is where the liquidity laying around this area, right? For every swing low and swing high. And these are the area of the most of the S&R trader that will place their stop loss. So this is, we know there is a liquidity area. So this is the first type. And for the second type is the equal low and the equal high. Alright, so when we call it as a double bottom, double top, or triple bottom, triple top as well. So this is the second type of the patterns area, and quite common as a reversal pattern for many traders. And but this pattern also are the field for the big trader to grab the liquidity. So they are also commonly known as double top or bottoms. So we know we have a lot of the stop loss placed above or below the equal low or equal high area. So this is the second type. And the last but not least is the trend line. So the trend line liquidity, this is also one of the common patterns that many traders will use. But how we know is there a valid trend line or not? So usually a valid trend line minimum must we have a 3 touch point, right? So when there is a trend line, no matter it's bearish or bullish, so we will know above the trend line we have the liquidity area, right? Because this is also where the trader they will use the trend line for their analysis and to place their stop loss, right? So right now let us see some live example in the real chart. So this is the one of the liquidity that we have mentioned just now. So this is the equal low, right? We have a first support, second, third, and fourth, right? Then it hit the zone and react. So this is the good liquidity, right? The stronger the support and resistance, the higher the potential of the supply and demand zone before the liquidity. So this is one of the liquidity area. And yes, the price touch the zone and react for second touch and react much more further. Why? Because seems like we have the double top right here. Can you see the double top? So this is where the big trader, they will manipulate the market and hunt the retail trader stop loss because of the liquidity area. Because we know sometimes the orders are too large and the big trader, they need to build up the liquidity in the market to fill their orders. So this is the reason why the big trader needs to create some false breakout or some false impression to the retail trader to make the opposite orders for the big trader to fill up their orders. And this is so called the manipulation, stop hunt or liquidity pool, right? And right here, this is the trend line as well. So as we can see, we have the first driven point, second driven point, and third. And end up, it still react to this demand zone, but it sweep and break through the zone at the end and react to the next demand zone. This is the next demand zone. And what is this liquidity? So this is the type 1 liquidity, where we call it as a swing low, right? Swing low. And we have another liquidity right here as a swing high. And after touch the zone, alright, after touch the zone, so what is this pattern? What is this pattern? This is another double bottom again. So when the double bottom, so most of the trader, they will know this is one of the reversal patterns. So right now the liquidity sittings and waiting to be swept or taken out. But what the price structure is doing, it push the price even higher, right? This is one of the supply zone, react, and finally break of structure. You see, finally you have the break of structure. And right here, this is one of the interesting part as well. So right here, this is one of the demand zone again. So we know the overall for this chart is an uptrend. Alright, so we are mainly focused on the buy. And before the zone, is there a liquidity? Can you find it out? So right here, we have the liquidity. So this is the one of the common type double bottoms, or what we call the equal low. So this is also one of the liquidity patterns before the zone. And for me, this is a good zone because there is the liquidity pool right here. And add up, see what the price is doing. Touch the zone again, right here, and it sweep again the liquidity right here. Right, it sweep again the liquidity right here. As you can see, this looks like we have the triple bottom. Right, this is the first support, second support, and the third support. Right, but right here forms another support again and ranging around the zone right here. And what the price doing here is sweep the double bottom liquidity here first, and only it react. And right here we have one of the bullish engulfing, and the price react from the zone and continue going upwards, right, and have a break of structure and a break of structure again. So before the break of structure, so what the price is doing here, still the same, it builds another new liquidity against right here, right? This is one of the liquidity as well. We call it as a double top or equal high liquidity, and at the end the price have the break of structure, goes up, right? So we know market always beats a lot of the liquidity by the big trader, right? This is how they have to fill their large order, and where the smart money trader, they love to trade against the retail trader. So always we have to think like them, else we will become the liquidity. Conclusion: as a good supply demand trader, it is extremely important to have the skill to identify this liquidity area and do not think like a retail trader. And this area is also where the market will seek to rebalance and feel for further movement. So I hope you enjoy this video, and thank you for watching this video. Please do follow and subscribe the channel and hit the likes button and comment below. Wish you all the best. Happy trading, happy profit, happy life. See you again in my next video. Bye bye.